Hey, what's up, guys? Today I'll be talking about Forex. In Forex, you go in Forex you put two different currencies together, national currencies. So you can put US dollar versus the Japanese yen, and then you could see like which ones like depending on the chart, it could either go up or down, or it could either go like sideways. You could also put US dollar versus the euro. You could put US dollar versus the Mexican peso. You could do whatever you want. There's a bunch of pairs. Each one of these are called pairs. Yeah, these are called pairs because they're US dollar versus a Mexican peso. That's a pair. And you could kind of I think you could trade them almost the same as like the stocks. Like the stock, I think the main difference between stocks and forex is that in forex your broker can lend you money, and also in stocks. But let me just hold on really quick. So for in forex you have a broker that could lend you that could lend you like they could lend you for every $1 that you deposit into your account, they could lend you $50. $1 to $50. That's called the leverage. So whenever you open a broker, like an account somewhere for forex, you could put like pretend $100. So what's $100 times 50? I think that's like $5,000. So this is how much buying power you have. You could buy $5,000 worth of Japanese yen. You could buy $5,000 worth of the US, what is it, the US dollar versus the euro, anything like that. It's just $5,000 buying power. So like, so let me take you a chart really quick. So go to on the top, go to tradingview.com right here, tradingview.com, just so you can follow me really quick. And then right here at the bottom right here it says ticker. Put you could put Euro AUD. So what this is, it's the euro versus the Australian dollar. So see how you have a chart here? It looks kind of like the stocks, huh? It like the price action. I've read some books that it says like the price action, like everything's the same as in stocks almost, but like I haven't actually tried it out, so I'm not too sure. So anyways, look, check it out. Over here you're on the weekly time frame. That means each of these bars is a week. This is 1 week, this is another week, this is 3 weeks, 4 weeks, 5 weeks. So you're probably asking like, what the heck are all these bars? Like depending on the trader, it could mean different things. Later on, like you learn like some advanced psychology, like this bar could mean something for one guy. He could say, like some guy could say, this little thing, this bar means that, I think means that for me, well, I'm talking as the other person. For me, that could mean that it's gonna go down. That the market is gonna go down. But for someone else, this could mean that the market is gonna go up. So it depends on the person, on the investor. Like later on, you start figuring out how to like work it better, like how to trade better and all this other stuff. Like you finally know what the heck this, like how to read the chart better and things like that. So let me explain what the bars are really quick. So a bar, let me see, hold on. Like a bar could either be a green bar or a red bar. A red bar or a green bar. And then you have like a tail on the top, and a tail at the bottom. Sometimes you have tails on the top, tails on the bottom, depending on whatever the market's doing at that time. So what this means is that this red bar, this is called a bear bar. What that means is that the market, everyone that was trading that market at that time, they thought it was gonna go down for this bar. So if we are in the daily time frame, each one of these bars equals 1 day. Remember? Like we go back to our chart. This is a week. So it's because we're over here on the weekly time frame. See how we can choose week, 1 day, 4 hours, whatever. If I click on daily, 1 day, each of these bars is 1 day. 1 day, 1 day, 1 day, 1 day, 1 day. Each of these little things. So let's go back over here to our example. So this whole bar on the daily time frame, this is 1 day. So the bears, we remember a bear is anyone that thinks the market is going down. And then a bull, this green one, this is called a bull bar. Bull bar. This is exactly this. Well, each this is a single bar. So this is also a day, a full day. So this is a bull bar. What this means is that the bulls thought that the bulls won this day. Like, let me see, hold on. So a bull is anyone that thinks the market is going up. So when they say, like, sometimes you'll hear like on the news it says like bears win the, I don't know, like some stuff, random stuff, like bears brought down price of the stock to whatever. That's because they won. Like they brought the price down. Well, anyways, so this is one bear bar. This is one bear bar. And then this is a bull bar. So in a bull bar, like in the bottom here, or let me do a new, like a page. So remember, pretend like the market is doing whatever. It could do whatever, like pretend it's going up, whatever, doing whatever. Like, these are different bars, right? There could be red bars, green bars. Anyways, pretend whatever the market is doing. It doesn't matter. It doesn't matter. My main point is right here, this big bar right here. So this big bull bar, like, what that mean, what happened here is that inside this bull bar, let me try to do the bull bar again over here on this side. in this bull bar, like inside here, if we zoom in to the 4 hour, since each one of these bars is a day, if we zoom into a like the 4 hour, you'll see like a bunch of, like, let me show you from the chart. I'll just show you. See how this is a, this is a, well, later on I'll show you. I'll talk about a doji. This is a doji. This means that the bears, you know how I told you the red bars are bears? They barely won the bar. So let's zoom in. So this is weekly. Let's go down to a time frame below it, which is like a daily. So we go here. See? So let's see. So how many hours are in a, how many days are in a week? Remember, we were weekly time frame. Weekly, that's 1 bar. How many days are in a week? We go to day. So how many days? 7, right? So 1, 2, 3, 4, 5, 6, 7. So 1, 2, 3, 4, 5, 6, 7. These 7 are created that single bar over here. That weekly bar. They created that bar. So anyways, so you see how like it's kind of like a little bit like, it's hard to explain. Later on, like I'll tell you like how more advanced price action is like how, what the market is doing. Like you can read candlesticks. Oh, each one of these is called a candlestick. Why? Because this is the body of the candle, and then the top is like the wick where you light the candle. That's a candlestick. So anyways, like these, I'll tell you more about price action later. But so anyways, each one of these has has like something inside it. Like it could have been like that, whatever. It could have been whatever. So let's go to a new page. The market can only do 3 things. It could either trend. It could either be in a trend. It could either do 2 things. It could be either in a trend or in a trading range. So what a trend is, a trend means that the market's going like that, and then like that, and then like that, like that. That's a trend. That's a bull trend. Remember what I told you? The bulls won. So the bulls think the market's gonna go up. So bull trend, because this is going up, right? So there is another one called a bear trend. A bear trend goes like this. That's a bear trend. This is extremely important. You should know, this is very important. Bear trends, bull trends. Remember, the market can only do 2 things. Well, there's some traders that argue that there's a third thing that the market can do, which is a transition. But we'll talk about that later. So a transition is when it goes from a trading range to a trend, and then a trend to a trading range. Well, anyways, I'll talk about it later. So the trading range, what that is like you have 2 lines here. Well, let's see. Look, I'll just show you randomly. The market goes like that, and then it goes like that, like that, like that, like that. And then it could break out that way. So this is a trading range. They call it a range because it is going between two lines. So you could draw 2 lines here, and then the market's doing whatever. So some traders, what they do is they turn bearish here, and then they short the market. They think the market's gonna go down here, and then when they do that, well, hold on. Let me hold on really quick because my recording software only lets me record 15 minutes at a time. So what's up, guys? We're back. So here, usually, sometimes, some traders take a position here in this circle, and then they say, "Oh, I think the market's gonna short." So what a short means? Short. It's you open a position a position because you're gonna think that the market is going down. So this is short. That's why basically you're a bear. You're bearish on this position. You're bearish. You think it's gonna go down. So you think it's gonna go down from here down here. So you take a short. That's what some traders do. They take a short, and then right when it gets around here, they open a position. They think it's gonna go up. So here you're taking a long. Or in other words, you're taking like you're bullish. A position. So the trick, the very hard trick is figuring out where these 2 points are. That's the money question. Where are these 2 points? How do you know it's gonna happen? Later on, when if you guys decide to, if you guys want me to talk more about it, let me know. I'm very good at figuring out where these points are. This one and this one. Well, actually, I'm good at determining the trends. Like, pretend it's a bull trend, and then it's gonna go out. It's gonna go like whatever, and then it's gonna go down. It depends. It depends on the market. Later on, if you guys want me to talk more about that, I can. So I'm very good at this part. Determining when it's gonna transition into a bear trend. So let's get back to this trading range. So some traders, they don't even take a position. They don't take a position here. They don't take it. They take it over here in the bottom. They say, oh, it's a little pullback. That's what they call it. It's a pullback, and then they open a position here, and then they think it's gonna go up, so they open a long position. They buy. So check it out here. Remember I told you about a bull trend? They think it's going up. Check it out. Here is a bull trend. Like over here, it could have done whatever. Here's a bull trend. It enters a trading range. The reason it enters a trading range is because bears and bulls, they are both fighting for it. They say, oh, the bears say, I think you've gone too far, so I'm gonna short it, and then the market goes like that. It goes up and down. Like they're fighting to win that. To win. They're fighting to win. If the bears win, the market goes down. See what I mean? See where the transition comes through? Like it's much more difficult than how I'm explaining it is super simplified. So anyways, let me know if you guys want me to talk more about it. But so they buy it and it goes up. Let me get rid of some of this stuff because it's a lot. It's like a lot of arrows everywhere. So here's I'll leave that there. So here's a trading range. It can go up and down, and then it could break out. It could either break out this way or it could break out that way. Remember, I told you. It depends. But there's a higher chance that the market could break out upwards. I'll tell you more about how can you tell, or what the heck. It's a lot of stuff. Like, you really need to get into this a lot. You could learn about this in books, everything. Different people that know how to trade, whatever. So yeah, it's like the beginning of Forex. I just wanted to do this quick video, that way you guys know what's going on. So here we're comparing the Australian dollar with the euro. Euro Australian dollar. Check it out. You can see the price. I think it's like €1 for every Australian dollar or something like that. 1.5 euros for every Australian dollar. I don't know if it's all the way around. 1 Australian dollar for a euro. Anyways, that's not really that important. Check it out. Later on, you guys can learn about trend lines, whatever. Like, you're probably confused. Like, what the heck is all this going on? Remember, these are trends. This is a small trend. Bear trend. Let me draw that in green. This is a bear trend. Why? Because it's going up. And then you see here this little transition is going down. This is a bull. Sorry, this is a bull trend. That's a bull trend. And then this is a bear trend. See this thing? Because it's going down. And then even this whole thing, let me zoom out to the weekly time frame. This whole thing is it's a big bull trend. It's a big trend. See all this stuff you need to know. Like, what the heck is going on here? It's like in a trading range or whatever. Like, you need to know what's going on. Like, check it out. Like, if you guys need more help, just let me know, because it's a lot. Like, I have to teach you guys a lot. See, check it out. There's a trading range, up and down, whatever. And then it finally breaks out upwards. See, that's a trading range. If this video helped you guys out, let me know. And let me know if you guys need any more help. Like, you can like my video or comment on it, whatever. I'll get back to you guys.